So I think that basically next 6 months for Bitcoin, very unclear. I can make the case for retesting the lows, or I can make the case for, not going below 25,000. But that I think that the 2-year or the 3-year case is very, very strong. I have high conviction that basically we'll probably have another positive liquidity cycle in that environment. And right now the valuation is very attractive, compared to its longer term, say, moving averages. I also think if you look at Bitcoin holding behavior, generally one thing you see in bull markets is that long-term holders begin selling some of their Bitcoin because they're up 5x, 10x, all this new money's rushing in, and they're reducing their positions.
In this video, Lyn Alden, founder of Lyn Alden Strategy, gives an outlook for Bitcoin future performance. Macro expert Lyn Alden warns a straight-up Bitcoin bull market is unlikely anytime soon. Alden also says that the markets are assuming the Fed's hawkish policies will eventually succeed to bring down inflation, but notes it's possible that they don't work. If they don't, it could lead to people losing faith in the Fed's policies and investing in alternative assets. The value of Bitcoin becoming more obvious as people realize banks are risky, says Macro Guru Lyn Alden. So we're seeing firsthand some of the risks that are just common throughout the world and the narrative of Bitcoin and basically being able to self-custody your own assets, having assets that can't be diluted, having assets that are not someone else's liability, I think are coming more to the fore. The narrative is obviously strengthened by some of these issues. According to analysis, 2 possible secnarios for Bitcoin in the next few days. If a rally takes place in the upcoming weeks, the first resistance level to watch is the 50-day moving average positioned around $28,000, followed by the crucial $30,000 level. Although there was a recent upward push prompted by the minor support level at $26,000, there is still a strong possibility of a decline towards the lower boundary of the channel and the support area at $25,000. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates about crypto market.
I think on the surface, the narrative is pretty clear, where basically it's, the banking system's unstable and people say, well, I can self-custody money with Bitcoin. I don't have to worry about counterparty risk. I think that's part of it, but I think probably the bigger move is basically due to markets repricing their forward expectations for how aggressively the Fed can hike rates. So we saw, for example, that 2-year treasuries, stopped increasing. We saw that, as you pointed out, the market's pricing in cuts by the end of the year. And a lot of that changed pretty rapidly, beginning with the banking crisis. And when you have a softening of forward expectations for how hawkish the Fed can be, then it gives a bid towards kind of anti-dollar trades, scarce assets like gold and Bitcoin. And so I think the biggest move that we've seen probably in this thing is not necessarily the narrative itself, but the kind of the structural market implications of rates. So I think as the Fed shifts from tighten money as tight as possible, control inflation as much as possible, and instead kind of balance that between financial stability, that's what's given Bitcoin and other scarce assets a chance to catch a bid. I think the challenge is that when we go back to those liquidity questions I talked about earlier, like if the Treasury tries to refill its Treasury cash account really quickly while the Fed's still doing QT, it's probably not going to be good for Bitcoin for, say, a multi-week period, most likely. But when you do get some sort of pivot, either the Fed ends its QT program or has to launch some sort of new liquidity program, or the Treasury has to take some other action, I would be a buyer of that capitulation if we were to get one. I think the prior cycle was instructive on this because, for example, Bitcoin formed a very big bottom in late 2018, early 2019, and then it grinded significantly higher, but then it kind of retested that bottom very briefly during the March 2020 sell-off. And so it didn't hit like lower lows, but it did kind of briefly go back and plumb those depths. And the difference was that it didn't stay there for many months. It just kind of had this like big flick down, and you had the liquidity response, and a number of weeks later, it was already back up to well above that bottom. And I think you could see a similar thing where you get kind of a brief problem that brings it down maybe lower than we expect. But I don't think it would stay in that lower band. I wouldn't be surprised to see it touch the lower 20s again if we get that specific scenario of a liquidity crisis from trying to refill the Treasury general account. There are scenarios that I think could push it to the upper teens yet again. But I think that would be it probably spend less time there than it did in this prior bottom. And instead, if they actually front run this, if the Fed ends quantitative tightening before you get the Treasury pull up, or if the Treasury does proactively kind of focus on issuing T-bills or increasing their Treasury account slower, then I think you're much less likely to retest those lows.
Alden says that Bitcoin's current value gives investors what may be a rare opportunity to accumulate the king crypto at such a price level. However, Alden says there's a possibility Bitcoin may dip in value later this year if federal monetary policies dry up liquidity. I do have some concerns around the second half of the year because once they resolve the debt ceiling, you're going to see the Treasury almost certainly try to suck back liquidity out of the market to fill back up its Treasury account, and if the Fed is still withdrawing liquidity at that time, you can have a rapid decrease in liquidity. So you could get negative retests. You could get consolidations, corrections. According to Alden, it's hard to say if Bitcoin rallies and then corrects from whatever level it rallied to. It might not correct back down to where it is now, or it could. If you don't see that there are any sort of competitors that are anywhere near close to what Bitcoin offers, which means is a strong buy. Meanwhile, Alden give $100,000 prediction for Bitcoin by the end of 2024.
I think the biggest risk, the most likely risk that would make me not change my thesis, but significantly extend my thesis, basically it would radically increase the length of time that the bullish thesis has to play out, is if you had some sort of draconian government crackdown on it. So we've seen a number of countries, Nigeria, Argentina, generally countries that are having some trouble with their currency, cut Bitcoin off from their banking system. So they're not saying it's legal to own it, but they're saying that banks can't send money to known crypto exchanges or known ways to enter Bitcoin. So it kind of makes the off-ramps from fiat to Bitcoin narrower and harder and more friction-filled. And when those countries do it, it doesn't matter for Bitcoin. It just matters for people in those countries. They have to use more peer-to-peer methods and some more friction-filled methods. But if you were to get that in the United States, I do think that'd be a very significant price blow. I think longer term, it wouldn't change the thesis of Bitcoin, 10 years from now, being much higher than it is. But I think that could add a number of years towards the next new all-time high, or the number of years it takes to get to, say, a six-figure price target. As far as derailing the thesis permanently, I think you'd need something absolutely critical, like a completely catastrophic bug or some other problem with the consensus itself. That would be, I think, the kind of the main thesis, like damaging thing from there. And even at that point, there are ways that the network can adjust. You can do basically various forks to fix the problem. But it would damage the reputation of the network if you would have something pretty catastrophic like that happen. Bitcoin itself has a clear regulatory picture from a security standpoint. The chair of the SEC, the chair of the CTFC, like Commodities Futures Trading Commission, multiple different regulators have pointed out that Bitcoin's not a security. Yeah, it's a commodity. Yeah. It's very clear in that front. I think the threats to Bitcoin are not securities related, but they're more choke point related. So it's either trying to kick miners out of the country or trying to increase the frictions of getting money out of fiat currency into buying Bitcoin, similar to what we've seen in developing countries. It's kind of a funny thing where if you see a government move to restrict your access to Bitcoin, it's actually kind of an advertisement that you probably need Bitcoin. Right? Because if they weren't threatened by Bitcoin, there'd be much less reason to do that. You generally only see that in countries that are having pretty severe currency problems. But because the United States and European Union are large enough and responsible for a significant percentage of capital flows, that does pose a price risk with any sort of, let's say, 18-month or 3-year period for Bitcoin if they were to aggressively go after choke points. Basically say that, it's still legal to hold Bitcoin, but the banks can't send money to Bitcoin brokers, crypto exchanges, anything like that. Yeah, I think the next 2 years or 3 years look very constructive. I think basically we have this window where the next 6 months, there's a lot of variables that I think could throw us off. I think Stanley Druckenmiller said it best. He's like, I can make the case for deflation or I can make the case for 8% inflation. Mm-hmm. And I think he's touching on the same kind of uncertainties I'm touching on here, which is that there's very key decision points that a handful of individuals can make, and that can determine pretty big swings in what happens. When you have bear markets, you generally instead see long-term holders are not selling, that they're buying more. And you start to get a very large percentage of Bitcoin that haven't moved in a year or more. And right now, we're very tight in that metric. Basically, we have a lot of indicators kind of either pointing that the bottom's in or that the bottom at most is likely to be retested. And so I'm very constructive with, say, a 2 to 3 year view. So I might push it out to late 2025 to give myself more room, but I do think there's a good chance of seeing 6 figures in this next, call it 3 year cycle. That's not for sure. I wouldn't go levered long and assume that to be the case. I wouldn't build a business specifically that's going to happen, but if I would say my base case is I would expect to see 6 figures over, say, the next 3 years.
6 figures is in 100,000 or even potentially higher than 100,000?
I think we start with 100,000 or 120,000 and see if we get to that before making higher conviction, higher price targets from there.
By 2025?
Yes.
The analyst believes that Bitcoin's attainment of the $32,000 level in the near future will confirm the possibility of reaching $60,000 in anticipation of the 2024 halving event. Plam asserts that the breakthrough of the $100,000 level will happen in 2025 after the halving. Bitcoin at $100,000. Insiders say the cryptocurrency could test new highs. This analysts predict Bitcoin is set to break the $100,000 mark following the halving event in 2024. That's all about today's analysis. Do you agree with Lyn Alden's perspective about Bitcoin performance? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.